Welcome to Beyond the Numbers. If you find these videos helpful, please like this video and subscribe to our channel. It really does support our team. And if you don't want to miss our next video, make sure to hit the notification bell. That way, you never miss a beat. We appreciate your support. With that, let's get started.
Well, hello again, Solis Wealth family. Greg Solis here with the update. First, on the family front, we had a great week last week celebrating Monica's birthday. Oh my gosh, she is so good at taking one day and stretching it out over a week or two. Boy, we did a lot of celebrating of her birthday. So we had a great time. The kids were in town, had all three of them, and Sydney was with Jack as well. So all six of us actually were able to go out to dinner, and we had just a fantastic time. So everybody's doing well. Monica, I know, felt so loved and appreciated, which she is. So that was great. Kids are all doing well. Jack's doing a good job here. He passed his first exam. That's good. He's getting ready to take this. He passed the SIE. Now he's getting ready to take the Series 7. So that'll happen here hopefully in the next month or so. Nicole's kind of like a world traveler right now, but she's doing great. Emily finished her junior year in college. That's hard to believe. My baby, my little girl, is going into her senior year of college. So hopefully this time next year, I will have no more kids in college. So that'll be nice. So family's doing well. I hope your family's doing well also. Well, market-wise, wow, it's been volatile already. I mean, I know that's kind of been the word of the last couple of years. Lots of volatility. As a matter of fact, in the month of June, since June 1st, peak to trough, we've seen the S&P 500 drop about right around 4.5%. The NASDAQ was off about 7.5%. So those are some pretty big moves, and things are moving quickly. Obviously, there's a lot going on with these inflation numbers. The consumer price index came out last week and didn't look real good. We had the CPI upwards of 4.2%. That's the highest reading we've had in a while. The good news is if we strip out the volatile food and energy, which is the so-called core, the core CPI was up about 2.9% year over year, which is obviously a lot better. Even better news was month over month. If we look at the core, when we strip out the volatile food and energy prices, we were up only 0.2% month over month. So that was good news, to be frank. I mean, so kind of good news, bad news. We know that energy prices are up with what's going on with the Iran war. That's creating some problems, but that hasn't really spilled over too much over to the macroeconomics, and it's not creating a lot of inflation. There's an uptick, but it hasn't been that bad yet. But if we have oil prices that continue to remain high, that's a problem. High energy means higher prices. It's a ripple effect through the whole economy. So that's what the market's real concerned about. So every time it seems like the war might escalate, we're seeing the market sell off because we're concerned about higher oil prices, higher energy prices, which means higher inflation. The Fed now if you look at the Fed of what they might do between now and the end of the year, of course, we'd been talking about the Fed lowering rates. Well, it's looking like the Fed might even raise rates before the end of the year. So the market's pricing in about a 60% chance that we'll see an increase in rates between now and the end of the year. Again, a lot of that depends upon what happens with the Iran war. The reason why that's happening is the economy still remains pretty strong. GDP numbers look good. Employment numbers still look pretty good. So we got a strong economy, and we have inflationary pressures with these higher oil prices. So hopefully if we get the war behind us, oil prices come down, maybe the Fed won't have to raise rates. I'm feeling like that's probably our base case of what we think will happen. And so we don't see rates spiking up, but we certainly don't see them coming down rapidly. So good news, bad news there for sure. But overall, the market's been doing well. I mean, we were off to a pretty good start year over year. We're doing really well. Bond prices have held in pretty good. The 10-year Treasury is right at about 4.5%. It's hanging in there. So overall, everything's in good shape. Lots of volatility, but if there's questions, concerns, or anything we can do for you, you know we're always here for you. So my very best to you and your family. Take care and God bless.